Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Linn & Associates with your weekend update for this Friday, April 7th, 2017, about 3:20 p.m. Central Daylight Time. Stock indices down, but nowhere near the lows that they had gotten to. The market, of course, saw last night the Syrian airstrikes that the U.S. had launched. And off of that, stock indices fell. But I think that once the market understood this was a message, this wasn't going to war per se yet, the market was able to recover. Gold had gotten up to 1273.30 off the combination of that event, Syria, Swedish terrorist attack, and a very bad number in jobs data, but 1 week of a 98,000 gain that they were looking for 180,000 does not make a trend. At the same time, the unemployment rate fell to 4.5%. I don't know that that's bad for gold because gold was overbought and it needs to work out of that anyways, but we'll talk about that in the update there. Where you did keep the bid was in the crude. Now, it did get up to 52.95 and it closed about midway in the range today, and a lot of that has to do with just the fact that there's all this going on in the Middle East, and now I understand a Russian frigate is moving into the area. So there'll be more of this talk, but I think it's talk. I don't think you have any chance of, honestly, the U.S. and Russia going to war with each other over this. What I really think is it's messages being sent out by President Trump that the U.S. is back. Now, when you take a look at the S&P and just look at the monthly chart, for the month we're down, and this is only the first week of the month, 7 ticks. You wouldn't know that we went to war over that, am I right? We're not that far away from the all-time high of 2401, roughly 50 points. Not bad action. When you go to a weekly chart, you can see that the market's been in a down thrust, tried a rally, gave it up, and is going to close for the week a fraction lower. Nothing yet bad, but the market's thrusting down. When I go to the S&P, the swing lines, this is to me the important part, much more important than the others. I got the lower highs, lower lows. That is bearish. In fact, if the market takes out this week's low next week, you could even take this arrow and move it over there. So we've got the market in a trend that's down, but it is still over the 18-day average of closes. Therefore, I think you're looking at a corrective mode, not an overall mode where the market is falling apart and going lower. That's my interpretation of it, because you're over the 18-day average of closes, and because when you look at the black dashed lines, which are Bollinger Bands, all the market had done, and this was now about 6 weeks ago, it got up towards that upper Bollinger Band, and it is corrected. It's not uncommon on a correction to get back to the 18-week moving average of closes on this chart to see what's going on. Something that's also been taking place is the market lost what we call that embedded reading, and very gradually it's been working itself down. The market is now on the longer term basis, not the daily charts. It's in an overbought condition. When you come to the Dow, you've got the same thing, an overbought condition with a 76 reading. Now, if that reading gets under 70, it's no longer overbought. Like the other stock indices, I view the market as having a trend based on the swing line that is down, that is countered by the fact that the market's still over the 18-week moving average of closes. Should we get a close under those 18-week moving average of closes, I can return to the bear camp. The market that's held up just beautifully has been the NASDAQ. It just doesn't want to give much up. And as you can see, it still has the opposite pattern. It's got basically higher lows that have been violated, and the market keeps coming back through them, and it keeps the market very strong. I'm going to call the trend up. I'm going to call the bias up, and the slow stochastics still say there's serious buying going on. The opposite end of the spectrum hits us with the Russell. You have so many different types of markets right now. You have a market with lower highs, lower lows, under the 18-day average. The trend is down, the bias is down, and it's hit its objective of the lower Bollinger Band at that 1346 level, finding some support. There's no reason to be a buyer, though, of that market. It's not throwing it off in any manner, and momentum is still pointing down here. In the VIX, like everything else, and I think I've been pointing this out to traders, this is a type of trade just rips people apart that are trying to make something out of nothing. Let me give you the example. Normally, you're trying to play for a trend that'll work. This is a contra-trend market. You're supposed to sell into the upper Bollinger Band. That's what it's been doing. If you take a look, close your eyes, light a candle, and pray that the market will return to the 18-day average, if not the lower Bollinger Band. Then when you're buying, you're trying to accomplish the same thing. Then you're going short, looking for the same, buying, looking for the same, maybe even the upper Bollinger Band. It is the opposite of what a trend trader does, but it is what is going on in the VIX. And if I make this even a smaller chart, it really shows itself. I just wanted to show you the past 2 months. I'll narrow that in for next time. The 10-year notes are still in an uptrend. You have higher lows, higher highs. However, you have run into a brick wall at the upper Bollinger Band that was really put to the test with the Syrian airstrike, and bang, the market can't hold on to those gains. Now the question is, if you take out 12400, what happens? And you will lose the uptrend. You cannot begin on a weekly chart a downtrend. You can get a bias, but you can't begin a trend because you got higher highs and higher lows. In the dollar index, all you've done is rally back to the 18-week moving average of closes and run out of momentum. In the process, you're no longer oversold. So the dollar is now what I'm going to call evenly balanced, and we're all going to be asking, what is the next trend going to be for the dollar, as the euro on the weekly charts have fallen from its upper Bollinger Band and come right back. They are mirroring themselves, but it's reverse images. Very, very interesting as to what's going on. This chart is still bullish, however, unlike the dollar. Why? Higher lows, higher highs, right back to that number. If I come back to the dollar, you had a higher high and a lower low. There's no trend on the dollar. In the British pound, the market has got a higher high and a lower low on the weekly charts. The daily charts are looking bearish, but not the weekly. They're finding support right here in this neighborhood of the 18-day average. It's going to be 18-week moving average of closes. It closed under it this week, and it's going to be around 123.89 late in the day. The settlement's coming about 2:30 Chicago time, so that won't be the settlement, but the market has been breaking down as the day's gone on. And the Canadian dollar didn't get much of a lift with the rally that we're seeing in the crude and the products. Look at this, still lower highs and lower lows. So not much going there. Momentum is still pointing down. Overall, not a pretty chart. Japanese yen has a pattern of a lower low and a higher high. You are not trend trading on the weekly chart. You have an overbought market with support coming in between 88.31 and 87.81. Last, we get to the crude oil, and the crude has actually got a pattern here that we should take a look of. And I want to come back a little bit. I want to come and show you this right here. We have a high this time of 54.34. We drop down, come up to 53.95. Do you see that? Then you start, let me come right here, 54.94. So what did the market do? It made a higher high, and then it breaks through that low. That's why you're not trending in the market. You got a higher high and a lower low now where the market's trying to come up, and guess what? What's the neutral point on the chart? The 18-week moving average of closes, it's right where you're at. Nat gas, where do you think it's going to end up battling? I'd be very surprised if it just doesn't, in this general area, run out of some momentum. It's been in a downtrend in terms of the swing line. It neutralized it because it's over the 18-week moving average of closes right now, but any close under 320.60 will get the weekly chart back to the downside. So those are the things that I start looking at and see where they're going. I want to talk to you, and I want you to make a decision. I'm going to be raising the price of my charting course. It's coming fast. It's not going to hang where it's at. Right now, my course includes, and let me explain this to you, 54 videos, each one about 8 minutes long or so. 54. You see what I do, then you do the same. How do you do that? Because we include charting software with it, and it's got all the data of all the markets. I mean, I don't just pick and choose. You can go back to any futures markets you want. It's going to have data that goes back a very long period of time. Then in the mornings, and I'm talking Monday through Friday, I try to put out every morning a webinar, a video, let's call it. It's better called a video, where I review 40 charts today. But I'm going to go over Bollinger Bands. I'm going to go over swing lines. I'm going to go over window envelopes. I'm going to teach you what I'm doing. And from there, what you do is you start formulating your own game plan. Yes, you're going to get numbers that you have access to so you can plot certain of the indicators just the way that I do. You're going to see when I say buy here and sell there, and you will see me lose. You will see me win on trade recommendations. That's the important thing. But you're going to see a game plan develop. How do you get this? Well, you can call my staff. You can go to our website under the word education, and you'll see a video there. It explains everything with the fact sheet. You can also click right up here if you see me on YouTube. Type in IRA 15 if you're going to buy the course. It'll take $15 off the $89.95. It'll bring it to $74.95. There's no shipping. There's no handling. There's no other extras. The value alone of my research, $60 for 30 days. The chart, $99 for 30 days. That's $160. It's thrown right in with it. And afterwards, you'll be through with the course. You can decide, do you want to use the type of charting we have? Do you want to stay with the research I offer? But I think you'll love what you see. At the very least, if you think about it, it's not even $1 in the gold market if you're trading a futures contract. Bet on yourself. I'm Ira Epstein. You have a good day.